We also discuss other plausible scenarios, including the risk of more worrisome outcomes. These and other scenarios and many other considerations go into policy, but are not reflected in projections of the most likely case. Thus, we always emphasize that the interest rate projections in the SEP are not a committee decision. They're not a committee plan. As Chair Yellen noted some years ago, the FOMC statement, rather than the dot plot, is the device that the committee uses to express its opinions about the likely path of rates. Today, the committee released balance sheet normalization principles and plans, revised balance sheet normalization principles and plans. We have long said that the size of the balance sheet will be considered normalized when the balance sheet is once again at the smallest level consistent with conducting monetary policy efficiently and effectively. We have sought to make the normalization process transparent, predictable, and gradual in order to minimize disruption and risks to our dual mandate objectives. Today's announcement is the result of discussions over the past 4 FOMC meetings about how best to achieve these goals. The plans have many technical details, and I'll be happy to answer questions on those details, but for now, I'll summarize the key elements. Since October 2017, we've been allowing our asset holdings to decline by not reinvesting all of the payments we receive as securities matured or were prepaid. Today, we announced that we intend to slow the runoff of our assets starting in May and to cease runoff entirely in September of this year. In September, reserve balances may still be somewhat above the level required to conduct policy efficiently and effectively. If this is so, we may hold the size of our asset holdings roughly constant for a time. During this time, ongoing gradual increases in currency and our other non-reserve liabilities would imply very gradual declines in reserve balances. When the committee judges that reserves should not decline further, securities holdings will again begin to rise as dictated by the growth of demand for our reserve and non-reserve liabilities. We believe that these plans will facilitate a predictable, transparent, and smooth process, and we will make additional adjustments if conditions warrant. The committee will soon turn to a few remaining normalization topics, including the desired maturity composition of our portfolio of Treasury securities. We maintain our long-stated intention to return to a portfolio consisting mainly of Treasury securities. Thank you, and I will be glad to take your questions.